Question 1. Topic: Liability insurance basics. An insured has a commercial general liability (CGL) policy. A customer slips and falls in the insured store, resulting in bodily injury. Which of the following coverages would respond to this type of claim? A. Coverage B. Personal and advertising injury. B. Coverage A. Bodily injury and property damage. C. Coverage C. Medical payments. D. Workers' compensation. Answer B. Coverage A. Bodily injury and property damage. Explanation. Coverage A. A CGL policy provides coverage for bodily injury and property damage claims arising out of premises or operations. The slip and fall incident would trigger this coverage since it involves bodily injury occurring on the insured's premises. Coverage B relates to personal and advertising injury, which would not apply in this case as it covers issues like defamation, not physical harm. Coverage C covers medical payments regardless of fault, but is typically for smaller immediate medical expenses, not for comprehensive claims like bodily injury lawsuits. Workers' compensation only applies to employees injured on the job, not customers. Relevant rule. CGL policies are structured to differentiate between bodily injury or property damage, coverage A, and other liability types, coverage B and C. This is governed by the standard ISO form for commercial general liability. Question 2. Scenario question. Topic: Claims process and adjusting. Mr. Delgado owns a small retail business. A fire breaks out in the building next door, causing smoke damage to his inventory and forcing him to temporarily close the store for repairs. He files a claim under his business owner's policy BOP. Which of the following options is the most appropriate action for Mr. Delgado to ensure his losses are compensated? A. Request compensation for both property damage and lost income through the business income coverage. B. File a claim for property damage only, as business interruption coverage does not apply to neighboring property damage. C. Apply for additional coverage through a separate business interruption policy since BOP does not cover loss of income. D. Wait for the neighboring business to file a claim under their liability policy to recover losses. Answer. Request compensation for both property damage and lost income through the business income coverage. Explanation. A business owner's policy BOP typically includes coverage for both property damage and business income loss due to direct physical loss caused by a covered peril, such as fire or smoke damage. Mr. Delgado is entitled to compensation for the damaged inventory, as well as the lost income incurred during the store's closure. Option B is incorrect because BOP policies cover business income losses if the damage to the property was caused by a covered peril, even if the fire originated next door. Option C is incorrect because Mr. Delgado does not need a separate policy for business income loss, as the BOP already provides this. Option D is incorrect because Mr. Delgado does not have to wait for the neighboring business to file a liability claim. His own BOP provides first-party coverage for his losses. Relevant rule. Business owners' policies are designed to protect small businesses by bundling property and liability coverages, including loss of business income. This is in line with standard BOP provisions from insurers. Question 3. Topic: Property insurance basics. An insured commercial property has a policy with an 80% coinsurance clause. The building's value is $1 million, and the insured carries $600,000 in coverage. If a covered loss of $100,000 occurs, how much will the insurer pay under the policy? A. $100,000. B. $80,000. C. $75,000. D. $60,000. Answer. C. $75,000. Explanation. Coinsurance requires the insured to carry coverage equal to the specified percentage, in this case 80% of the property's value. To avoid a penalty, the insured must carry at least $800,000 in coverage, $1 million x 80%. Since the insured only carries $600,000, a penalty applies. The formula for calculating the payout is insurance carries to as coinsurance percentage property value x loss. Substituting values. 600,000 into a 0.8x x 100 th annual 600,000 800,000 x 100 th annual 0.75 x 100 th equals 75,000. Thus, the insurer will pay $75,000 and the insured is responsible for the remaining $25,000. Relevant rule. Coinsurances. A policy condition that encourages policyholders to insure property to a percentage of its value, ensuring adequate coverage. Failure to meet the coinsurance requirement results in a reduced payout during a loss. Question 4. Topic: General insurance concepts. Which of the following statements correctly describes the principle of insurable interest in property insurance? A. Insurable interest must exist at the time of loss, but not at the time of policy inception. B. Insurable interest is not required for property insurance policies. Only life insurance policies are needed. C. Insurable interest must exist at both the time of policy inception and the time of loss to validate a claim. D. Insurable interest is determined solely by the amount of coverage selected by the insured. Answer C. Insurable interest must exist at both the time of policy inception and the time of loss to validate a claim. Explanation: insurable interest is a fundamental principle in insurance that ensures a policyholder has a legitimate stake in the property insured. It is required both at the inception of the policy and at the time of loss. This principle prevents moral hazard and ensures that the insured has a genuine interest in protecting the property. Option O is incorrect because insurable interest must exist at the inception of the policy as well. Option B is misleading, as insurable interest is essential in both property and life insurance. For life insurance, it is typically required at the time of policy issuance. Option D is incorrect because the amount of coverage does not determine insurable interest. It is based on the relationship of the insured to the property. Relevant rule: the requirement for insurable interest is mandated by state insurance regulations to ensure ethical conduct in insurance transactions. Question 5. Scenario question. Topic: Connecticut-specific regulations and laws. MS. Thompson operates a landscaping business and has a commercial auto policy. While transporting equipment, she is involved in an accident that results in damage to both her vehicle and another party's property. Under Connecticut's auto insurance regulations, what is MS. Thompson's responsibility regarding the minimum liability limit? A. She must ensure that her policy covers at least the minimum liability limit mandated by the state. B. There are no minimum liability limits in Connecticut, so she is not responsible for any amount. C. She is only required to have liability coverage if the accident results in injury to another party. D. She can choose not to carry liability coverage as long as she pays for any damages out of pocket. Answer: she must ensure that her policy covers at least the minimum liability limit mandated by the state. Explanation: in Connecticut, all drivers are required to maintain a minimum level of liability coverage for bodily injury and property damage. This ensures that injured parties can seek compensation for damages caused by an at-fault driver. Option B is incorrect. Connecticut does have minimum liability limits established by law. Option C is misleading, as liability coverage is necessary regardless of whether injuries occur. Option D is incorrect. While one might opt to pay damages out of pocket, Connecticut law mandates that drivers carry the minimum required liability coverage. Relevant rule: Connecticut's auto insurance regulations stipulate mandatory minimum liability limits to protect all road users. Failure to comply can lead to penalties, including fines and suspension of driving privileges. Question 6. Topic: Property insurance basics. Which of the following statements about the vacancy provision in property insurance policies is true? A. A property can be considered vacant as long as at least 50% of the space is occupied. B. If a property is vacant for more than 60 consecutive days, certain coverages may be reduced or eliminated. C. The vacancy provision applies only to commercial property policies, not residential ones. D. Insurers must provide full coverage for losses due to theft if the property is vacant. Answer: B. If a property is vacant for more than 60 consecutive days, certain coverages may be reduced or eliminated. Explanation: many property insurance policies contain a vacancy provision that stipulates when a property is considered vacant and how that affects coverage. Generally, if a property is vacant for more than 60 days, coverage for certain risks, such as vandalism, theft, or water damage, may be limited or excluded. Option A is incorrect. The definitions of vacancy vary, but most policies consider a property vacant when less than 31% of the property is occupied. Option C is misleading, as the vacancy provision applies to both commercial and residential policies. Option D is incorrect. Insurers often limit or exclude coverage for theft and other risks when a property is deemed vacant. Relevant rule: the vacancy provision is outlined in the policy's conditions and can significantly impact coverage during the vacancy period. Insurers generally provide these definitions in the policy documentation. Question 7. Topic: Casualty liability insurance basics. An insured individual is held liable for damages resulting from a car accident in which their personal vehicle was being used for a business purpose. Which of the following statements about the liability coverage for this incident is most accurate? A. The personal auto policy will provide full coverage for the damages since the insured is liable. B. The personal auto policy may exclude coverage for any accident occurring while the vehicle is used for business. C. A business auto policy must be purchased for personal vehicles used for business purposes to ensure coverage. D. The insured can choose not to report the accident to their insurer as it occurred during business use. Answer B. The personal auto policy may exclude coverage for any accident occurring while the vehicle is used for business. Explanation: personal auto policies often contain business use exclusions. If a personal vehicle is used primarily for business purposes, the policy may not cover accidents that occur during those times. This exclusion can lead to significant out-of-pocket costs for the insured. Option A is incorrect, as personal auto policies typically do not cover business use. Option C is partially correct in that if the vehicle is used frequently for business, a business auto policy should be considered to ensure adequate coverage. Option D is incorrect. A failure to report an accident can result in denial of coverage and legal repercussions. Relevant rule: liability insurance coverage is dictated by the specific terms of the auto policy, and it is critical for policyholders to understand the distinctions between personal and business use. Question 8. Topic: types of property policies. Which of the following correctly identifies a characteristic of the dwelling policy form D-3? A. It provides coverage for personal property on an actual cash value basis only. B. It is an open perils policy for the dwelling, but only named perils for personal property. C. It includes coverage for liability exposure related to the insured property. D. It covers only the structure and excludes coverage for other structures. Answer B. It is an open perils policy for the dwelling, but only named perils for personal property. Explanation: the dwelling policy form D-3 is known as the special form, which provides open perils coverage for the dwelling itself, meaning it covers all risks except those specifically excluded. However, it only provides named perils coverage for personal property, meaning only the perils listed in the policy will be covered. Option is incorrect, as D-3 can also cover personal property on a replacement cost basis if selected. Option C is incorrect because the D-3 does not provide liability coverage. Liability coverage must be purchased separately. Option D is misleading since the D-3 does cover other structures, but the coverage for other structures is usually at a set percentage of the dwelling coverage. Relevant rule: the characteristics and coverages of dwelling policies are outlined in the ISO standard forms and are crucial for property owners to understand when selecting coverage. Question 9. Topic: insurance regulation. In Connecticut, what is the minimum continuing education requirement for insurance producers to maintain their licenses? A. 10 hours of continuing education every 2 years. B. 16 hours of continuing education every 2 years. C. 20 hours of continuing education every year. D. No continuing education is required for insurance producers in Connecticut. Answer B. 16 hours of continuing education every 2 years. Explanation: in Connecticut, insurance producers are required to complete 16 hours of continuing education every 2 years to maintain their licenses. This ensures that producers stay updated with the latest laws, regulations, and industry practices. Option is incorrect because the requirement is higher than 10 hours. Option C is misleading. While continued education is necessary, the frequency and duration do not align with the state requirements. Option D is incorrect, as continuing education is a mandatory part of maintaining an active license. Relevant rule: Connecticut's insurance regulations require ongoing education for producers to enhance their knowledge and competencies in the ever-evolving insurance landscape. This requirement is governed by state insurance department regulations. Question 10. Topic: homeowners insurance. Which of the following is typically not covered under a standard homeowners insurance policy? A. Personal property losses due to fire. B. Losses from a falling tree that damages the house. C. Flood damage to the basement. D. Liability for injuries occurring on the insured property. Answer C. Flood damage to the basement. Explanation: standard homeowners insurance policies generally do not cover flood damage. Flood coverage typically must be obtained through a separate policy, such as the National Flood Insurance Program, NFIP. Option A is covered, as fire is a named peril in homeowners policies. Option B is also covered. Damage from falling trees is usually included if it damages the home. Option D is correct, since homeowners policies include liability coverage for injuries occurring on the insured premises. Relevant rule: homeowners insurance policies contain specific exclusions, and understanding what is not covered is essential for homeowners to assess their risk appropriately. Question 11. Topic: auto insurance. Under which of the following circumstances might a personal auto policy deny coverage for a claim? A. The insured driver was intoxicated at the time of the accident. B. The vehicle was being driven by an insured family member. C. The vehicle was used for commuting to work. D. The insured was driving within the speed limit. Answer: the insured driver was intoxicated at the time of the accident. Explanation: most personal auto policies contain exclusions for intentional acts and illegal activities, including driving under the influence of alcohol or drugs. This could lead to denial of coverage for any claims arising from such an incident. Option B is incorrect. The coverage typically extends to insured family members. Option C does not constitute a valid reason for denial, as commuting is usually covered. Option D is irrelevant to coverage denial. Driving within the speed limit is not a reason for denial. A relevant rule: insurance policies explicitly state the conditions under which coverage can be denied, including actions that contravene state laws. Question 12. Scenario question. Topic: commercial insurance. A bakery owner has a business owner's policy BOP that includes coverage for property damage and general liability. During a storm, the bakery's roof is damaged, leading to property loss and business interruption. Which of the following statements is true regarding the coverage? A. The BOP will cover the property damage, but business interruption may require a separate policy. B. The BOP does not cover business interruption under any circumstances. C. Both property damage and business interruption will be covered as long as the storm was an unexpected event. D. The BOP will only cover property damage, not liability for injuries sustained during the storm. Answer: C. Both property damage and business interruption will be covered as long as the storm was an unexpected event. Explanation: a business owner's policy BOP typically provides both property and liability coverage, including coverage for business interruption due to events such as storms, assuming that the storm is covered under the policy. Option A is incorrect because the BOP generally includes business interruption coverage. Option B is misleading. While it's true that some policies have limitations, BOPs commonly cover business interruption. Option D is incorrect as the BOP includes liability coverage for injuries on the premises. A relevant rule: BOPs are designed to provide comprehensive coverage for small businesses, balancing property and liability exposures. Question 13. Topic: umbrella insurance. What is the primary purpose of an umbrella insurance policy? A. To provide basic coverage for property damage only. B. To extend liability coverage above and beyond standard policies. C. To replace lost or stolen personal property. D. To cover the cost of a deductible on an auto policy. Answer: B. To extend liability coverage above and beyond standard policies. Explanation: umbrella insurance serves to provide additional liability coverage that exceeds the limits of standard auto or homeowners insurance policies. It acts as a safety net for high-cost claims. Option A is incorrect. Umbrella policies are primarily liability-focused, not property damage. Option C is misleading. Personal property coverage is typically covered under other specific policies. Option D is incorrect, as umbrella policies do not cover deductibles as they provide excess liability coverage. Relevant rule: umbrella policies are designed to provide additional protection for individuals who have significant assets to safeguard against large liability claims. Question 14. Scenario question. Topic: professional liability insurance. Dr. Smith, a physician, is sued for malpractice after a patient claims that an incorrect diagnosis caused harm. Which type of insurance would most likely cover Dr. Smith in this scenario? A. General liability insurance. B. Errors and omissions insurance. C. Professional liability insurance. D. Property insurance. Answer: C. Professional liability insurance. Explanation: professional liability insurance, also known as malpractice insurance, is specifically designed to cover professionals against claims of negligence or errors in providing their professional services, such as incorrect diagnoses or treatments. Option A is incorrect, as general liability insurance does not cover professional negligence. Option B is partially correct, but typically applies to service providers rather than medical professionals. The professional liability is more appropriate for physicians. Option D is irrelevant, as property insurance covers physical assets, not professional conduct. Relevant rule: professional liability insurance is essential for individuals in various professions to mitigate the risks associated with potential claims of negligence. Question 15. Topic: risk management. Which of the following is the primary goal of risk management in insurance? A. To eliminate all potential risks associated with an insured property. B. To identify, assess, and prioritize risks to minimize their impact. C. To transfer all risks to the insurer without any obligation to the insured. D. To avoid purchasing insurance altogether. Answer B. To identify, assess, and prioritize risks to minimize their impact. Explanation: risk management involves systematically identifying, assessing, and prioritizing risks, followed by coordinated efforts to minimize, monitor, and control the probability or impact of unfortunate events. Option is incorrect, as it is often impossible to eliminate all risks. Option C is misleading, and while insurance can transfer risk, not all risks can or should be transferred entirely. Option D is incorrect because purchasing insurance is often part of a broader risk management strategy. Relevant rule: risk management practices are crucial for businesses and individuals to understand potential exposures and the best methods to address them. Question 16, scenario question. Topic: health insurance. Mark as health insurance that requires a car payment for specialist visits. If he visits a specialist and pays a car payment, what can he expect regarding the remaining charges? A. He will be responsible for the full balance after the car payment. B. His insurance will cover all remaining charges after the car payment. C. He will only pay additional costs if he reaches his deductible. D. The remaining charges will be covered as long as they fall within the coverage limits. Answer D. The remaining charges will be covered as long as they fall within the coverage limits. Explanation: when a patient pays a car payment for a specialist visit, the health insurance will typically cover the remaining charges, assuming they are eligible and within the coverage limits specified in the policy. Option A is incorrect. The insured would not pay the full balance if covered by the policy. Option B is misleading. While the insurance may cover most charges, not all may be covered depending on exclusions. Option C is incorrect, as the deductible primarily applies to services and is distinct from copayment structures. Relevant rule: health insurance policies outline copayment structures, deductibles, and coverage limits, which significantly influence out-of-pocket expenses. Question 17. Topic: workers' compensation. Which of the following statements is true regarding workers' compensation insurance? A. It is optional for most businesses and employees. B. It covers employees for work-related injuries and illnesses regardless of fault. C. Employees must prove employer negligence to receive benefits. D. Workers' compensation only covers medical expenses and not lost wages. Answer B. It covers employees for work-related injuries and illnesses regardless of fault. Explanation: workers' compensation insurance is designed to provide benefits to employees who suffer work-related injuries or illnesses, regardless of who is at fault for the incident. This no-fault system protects both employees and employers. Option is incorrect, as many states require businesses to carry workers' compensation insurance. Option C is misleading. Employees do not need to prove negligence to qualify for benefits under workers' compensation. Option D is incorrect. Workers' compensation typically covers both medical expenses and lost wages, along with other benefits. Relevant rule: workers' compensation laws vary by state, but generally establish a system of benefits for employees injured on the job. Question 18. Topic: insurance terms. What is the definition of deductible in an insurance policy? A. The maximum amount the insurer will pay for a covered loss. B. The amount the insured must pay out of pocket before the insurer covers a claim. C. The percentage of a claim that the insurer pays. D. The amount the insured pays in premiums for coverage. Answer B. The amount the insured must pay out of pocket before the insurer covers a claim. Explanation: the deductible is the specified amount that the insured must pay before the insurance company pays for covered losses. It is a common feature in various types of insurance, including auto and health insurance. Option A is incorrect. The maximum amount the insurer will pay for a covered loss is referred to as the policy limit, not the deductible. Option C is incorrect, as it describes a coinsurance arrangement where the insurer and insured share the costs after the deductible is met. Option D is misleading. While premiums are payments made for coverage, they do not relate to deductibles. Relevant rule: understanding deductibles is crucial for policyholders, as it affects the amount of out-of-pocket expenses they might incur when filing a claim. Question 19. Scenario question. Topic: insurance adjusters. During a home inspection after a storm, an insurance adjuster finds significant roof damage. The homeowner files a claim for repairs. Which of the following actions is the insurance adjuster most likely to take first? A. Deny the claim based on the adjuster's initial assessment. B. Immediately approve the claim without further investigation. C. Assess the damage and estimate the cost of repairs. D. Request the homeowner to provide detailed photographs of the damage. Answer C. Assess the damage and estimate the cost of repairs. Explanation. The primary role of an insurance adjuster is to investigate and evaluate claims. They assess the extent of damage, estimate repair costs, and determine the validity of the claim based on the policy terms. Option A is incorrect as claims are not denied without a thorough evaluation. Option B is also incorrect. Adjusters do not approve claims without investigating. Option D may be part of the process, but is not the first action taken. The adjuster typically conducts their assessment first. Relevant rule. Insurance adjusters play a critical role in the claims process by ensuring that claims are handled fairly and in accordance with policy terms. Question 20. Topic: Flood insurance. Which of the following statements is true regarding flood insurance policies? A. They are automatically included in standard homeowners insurance policies. B. Coverage is only available for residential properties, not commercial properties. C. Flood insurance is provided through the National Flood Insurance Program (NFIP). D. They cover all types of water damage without exclusions. Answer: C. Flood insurance is provided through the National Flood Insurance Program (NFIP). Explanation: Flood insurance is primarily offered through the National Flood Insurance Program (NFIP), which provides coverage for both residential and commercial properties. Option is incorrect. Flood insurance is usually not included in standard homeowners policies and must be purchased separately. Option B is misleading. While residential properties often dominate, commercial properties can also obtain flood insurance through the NFIP. Option D is incorrect. Flood insurance has specific coverage limits and exclusions, such as damage caused by sewer backups. Relevant rule. Flood insurance is essential in flood-prone areas, and understanding the specific terms and exclusions is vital for property owners. Question 21. Scenario question. Topic: Life insurance. Sarah purchased a whole life insurance policy with a face value of $100,000. After 10 years, she decides to take out a loan against the policy. Which of the following statements is true regarding her ability to do so? A. She cannot take a loan against her policy under any circumstances. B. The amount she can borrow is limited to the policy's cash value. C. She must pay a fee to take out the loan. D. The loan must be repaid in full within 30 days. Answer: B. The amount she can borrow is limited to the policy's cash value. Explanation: Whole life insurance policies accumulate a cash value over time, which the policyholder can borrow against. The loan amount is typically limited to the cash value that has accumulated in the policy. Option A is incorrect. Policyholders can borrow against the cash value. Option C is misleading. While there may be interest on the loan, there is usually no fee to take the loan out. Option D is incorrect, as the loan does not have to be repaid within 30 days. However, unpaid loans can reduce the death benefit. Relevant rule. Whole life insurance policies provide the option to borrow against the accumulated cash value, offering financial flexibility for policyholders. Question 22. Topic: Commercial auto insurance. Which of the following vehicles would typically be excluded from coverage under a standard commercial auto insurance policy? A. A delivery van used for transporting goods. B. A personal vehicle used occasionally for business purposes. C. A vehicle that is used exclusively for racing. D. A company car used by an employee for work-related travel. Answer: C. A vehicle that is used exclusively for racing. Explanation: Vehicles that are used exclusively for racing are typically excluded from coverage under standard commercial auto insurance policies due to the high-risk nature of racing activities. Option A is covered, as delivery vans are standard commercial vehicles. Option B is incorrect. Personal vehicles can sometimes be covered if they are used for business purposes, depending on the policy. Option D is covered, as company cars used for work-related travel are typically included in commercial auto policies. Relevant rule. Commercial auto insurance policies specify exclusions and limitations, making it essential for businesses to understand what is and isn't covered. Question 23. Scenario question. Topic: Health insurance. Emily has health insurance with a high deductible held per AHB. After an unexpected medical emergency, she incurs significant medical expenses. Which of the following options can she use to help pay for her out-of-pocket costs? A. A health savings account, HSA. B. A flexible spending account, FSA. C. A traditional IRA. D. A credit card. Answer: a health savings account, HSA. Explanation: An HSA is specifically designed for individuals with HSA, allowing them to save money tax-free to pay for qualified medical expenses, thus helping manage high out-of-pocket costs. Option B is incorrect in this context. While an FSA can also help, it is not exclusive to HDHPS and often has different rules regarding funds. Option C is not applicable. A traditional IRA is for retirement savings, not health expenses. Option D can be used, but it does not provide the same tax advantages as an HSA. Relevant rule: HSAs provide a tax-advantaged way for individuals with high deductible plans to save for future healthcare expenses. Question 24. Topic: Insurance premiums. Which of the following factors can increase an individual's insurance premiums? A. Maintaining a clean driving record. B. Increasing the deductible amount. C. Filing multiple claims within a short period. D. Having a good credit score. Answer: C. Filing multiple claims within a short period. Explanation: filing multiple claims can signal higher risk to insurers, resulting in increased premiums as they view the policyholder as more likely to file claims in the future. Option A is incorrect. A clean driving record typically helps keep premiums lower. Option B is misleading. Increasing the deductible often leads to lower premiums as the insured assumes more risk. Option D is incorrect. A good credit score can help lower premiums as it indicates responsible financial behavior. Relevant rule: insurance companies assess various risk factors to determine premium rates, emphasizing the importance of managing claims history. Question 25. Topic: Workers' compensation insurance. Which of the following scenarios would most likely be covered by workers' compensation insurance? A. An employee injures their back while lifting heavy equipment at work. B. An employee trips and falls at home while working remotely. C. An employee gets into a car accident on the way to work. D. An employee develops a cold after traveling on a business trip. Answer: an employee injures their back while lifting heavy equipment at work. Explanation: workers' compensation insurance typically covers injuries that occur while performing job-related tasks, such as lifting heavy equipment in the workplace. Option B may or may not be covered depending on the circumstances, as remote work injuries can be complicated. Option C is incorrect because commuting accidents are generally not covered under workers' compensation. Option D is not covered as workers' compensation does not typically include common illnesses like colds. Relevant rule: workers' compensation covers work-related injuries or illnesses, but the location and activity at the time of injury play a crucial role in determining eligibility. Question 26. Scenario question. Topic: Liability insurance. John owns a landscaping business and has a general liability insurance policy. While on a job, one of his employees accidentally damages a customer's fence. What action is John most likely to take to address this issue? A. Pay for the repair out of his own pocket. B. File a claim under his general liability insurance policy. C. Ask the customer to repair the fence themselves. D. File a claim under his workers' compensation insurance. Answer: B. File a claim under his general liability insurance policy. Explanation: general liability insurance covers damage to third-party properties, such as a customer's fence. John would likely file a claim under this policy to cover the repair costs. Option A is incorrect. While John could pay out of pocket, his insurance is designed to cover such incidents. Option C is not appropriate as the business is responsible for the damage. Option D is incorrect as workers' compensation is for employee injuries, not third-party property damage. Relevant rule: general liability insurance protects businesses against claims for property damage and bodily injury caused to third parties during operations. Question 27. Topic: Underwriting. Which of the following is a primary function of the underwriting process in insurance? A. To pay claims for covered losses. B. To determine the risk associated with insuring a person or property. C. To invest premiums in stocks and bonds. D. To provide customer service to policyholders. Answer: B. To determine the risk associated with insuring a person or property. Explanation: the underwriting process involves evaluating the risk of insuring a particular individual, business, or property and determining appropriate premium rates. Option A is incorrect. Paying claims is the function of the claims department, not underwriting. Option C is misleading. While insurance companies may invest premiums, this is not part of the underwriting process. Option D is incorrect. Customer service is handled by separate departments, not underwriting. Relevant rule: underwriting is essential in assessing risk and determining the terms and pricing of insurance policies. Question 20. Scenario question. Topic: Health insurance. Lisa has a health insurance policy with a $2,000 deductible and 20% coinsurance. She recently had surgery costing $10,000. How much will Lisa be responsible for paying out of her pocket? A. $2,000. B. $2,000 plus 20% of the remaining balance after the deductible. C. 20% of the total surgery cost. D. Nothing, since the insurance covers all costs after the deductible. Answer: B. $2,000 plus 20% of the remaining balance after the deductible. Explanation: Lisa will first pay her $2,000 deductible. After that, her coinsurance requires her to pay 20% of the remaining balance. The remaining balance after the deductible is $8,000, so Lisa will pay 20% of $8,000, which is $1,600. Her total out-of-pocket cost will be $2,000 deductible plus $1,600. Coinsurance equals $3,600. Option is incorrect because it does not account for the coinsurance. Option C is incorrect as coinsurance only applies after the deductible is paid. Option D is incorrect because coinsurance is still applicable after the deductible is paid. Relevant rule: deductibles and coinsurance affect how much the insured pays out of pocket, with the remaining balance covered by the insurer. Question 29. Topic: Business interruption insurance. What is the primary purpose of business interruption insurance? A. To pay for damages to the business's physical property. B. To cover the income lost when a business is forced to close due to a covered event. C. To provide funds for expanding the business. D. To pay for workers' compensation claims. Answer: B. To cover the income lost when a business is forced to close due to a covered event. Explanation: Business interruption insurance compensates a business for lost income when operations are halted due to a covered event, such as a natural disaster or fire. Option A is incorrect, as property damage would be covered by commercial property insurance, not business interruption insurance. Option C is incorrect, this insurance does not fund business expansions. Option D is incorrect, workers' compensation is a separate type of insurance. Relevant rule: business interruption insurance helps businesses stay financially stable during periods of downtime caused by unexpected events, protecting them from lost revenue. Question 30. Scenario question. Topic: Homeowners insurance. Emily's home is damaged by a fire and she files a claim under her homeowner's insurance policy. The insurer investigates and determines that Emily left her oven on, which caused the fire. What is the most likely outcome? A. The insurer will deny the claim because Emily was at fault. B. The insurer will partially cover the claim based on the cause of the fire. C. The insurer will pay the claim as long as fire damage is a covered peril in her policy. D. The insurer will only cover the damage if Emily has a separate fire insurance policy. Answer: C. The insurer will pay the claim as long as fire damage is a covered peril in her policy. Explanation: Homeowners insurance generally covers fire damage, even if the policyholder is at fault, as long as negligence does not void the policy. Option is incorrect because fault does not automatically result in denial unless the policy specifically excludes coverage for such instances. Option B is incorrect, coverage is not typically partial if the peril is covered. Option D is incorrect because homeowners insurance usually covers fire damage without requiring a separate policy. Relevant rule: most homeowners insurance policies cover fire damage regardless of fault, provided that the policyholder adheres to the terms of the policy.